Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody. Today we will take a look at the Great British Pound, mostly because on the euro currency we have taken a look just yesterday, and right now we do not see any significant changes that makes possible that we really need to some update to euro currency. So on the euro currency hasn't happened something drastic that really needs to new comments from us. On the New Zealand dollar, the same. Our setup and the medium-term analysis that we have prepared a couple of days ago is still valid, and market has turned to the retracement that we have discussed, and it also doesn't need any update of the situation. Formally on Friday we said that probably we could get some significant pattern on the Canadian dollar, but this pattern hasn't been completed yet and has been confirmed. That's why we probably have to postpone the discussion of the Canadian dollar on the later times, and that's why in fact only the currency pair that we have among the majors that we could discuss right now is the Great British Pound. On the Great British Pound, situation is really interesting on the bigger charts, I mean the monthly and weekly mostly, and you could read this in our weekly research. On the daily perspective, shortly speaking, the recent comments from the Fed that probably we should treat mostly as the dovish, so it's very difficult to treat it as the hawkish, since Yellen, in fact, put the rate hiking in the dependence on the economical data that Fed will get in the nearest future. The most concern on the Fed stands around the inflation and the wage cost, because the major problem why Fed is not really sure with the rate hiking stands in the lack of inflation, because crude oil is falling, dollar becomes greater, but inflation stands anemic, and absence of the inflation makes not quite reasonable the rate hiking. Since we do not have inflation, why we should raise the rate? That's the major concern right now. And that's why the most recent comments as the 18th of the March and the recent testimony of the Yellen mostly should be treated as the slightly dovish comments, and that most investors start to think that the rate hiking will postpone in September. Taking into consideration this factor, we should say that it makes possible the deeper retracements on the assets, on the dollar-related assets across the board. We mean Forex currency pairs, gold, maybe crude oil, or some other dollar-related currencies. So the recent comments makes position of the dollar a bit weaker, and right now it's not sufficient to feed market with the promise of the rate hiking to hold and continue and support the bearish trend. That's not sufficient anymore. And although Fed still talk about the rate hiking, but it's not quite sufficient, and the market start turn to some indecision. So you can see the recent price action on the Great British Pound. That was reaction on the dovish comments on 18th of the March. Okay. Then since then, market stands inside of this range, and that is an indecision situation. Also, guys, recent CFTC data on the futures on the Great British Pound shows that open interest has dropped significantly, mostly among the speculation positions. So speculators have closed as longs as shorts, and that points also on the indecision situation. So on the daily time frame chart, now let's turn to the technical analysis. We see that during this reaction, market has hit significant resistance. That's the confluence resistance on the weekly chart and daily but also market has retested previously broken lows. Right now, this range of this day holds all price actions since then. So you can see 1, 2, 3, 4, 5, 6, 7 sessions in a row, almost 2 weeks stands inside of this range. The common practice of trading such situations points on watching for direction of the breakout. So there are two most important points here. That is that they are extremes of this candle, this top and this bottom. Depending on what extreme point will be taken on, the further action will continue in the same direction. So if market will move higher and taken out of this top, we could count on further upward action, while return right back down and taken out of these lows will point on breakout to the downside of the significant support and further continuation to the downside. What we could get here. Also pay attention to 1618 extension here of this most retracement. This extension is very typical for the head and shoulders pattern. And since the recent positions of the Fed and the data that is coming from the United States weren't able to close the chances of the deeper retracement to the upside, this could be very significant detail on this chart, because it could turn that right now we see the half of the head and shoulders pattern. And this could make possible the deeper retracement on the Great British Pound. At the same time, you could see that market hasn't quite reached the 1618 extension. And from that standpoint, theoretically, we can't exclude the appearing of the butterfly here. For example, market could form the left wing, this market could form right wing of the butterfly here and turn to this reach of this target and then turn to the upside. That's also possible. So with the wash and rinse of these lows, that's really will be very tricky action here. This could be. Because here, guys, if you have read our previously made weekly research, you know that this level is very strong support on the weekly chart. In the shorter perspective, so if we'll take a look at the 4-hour time frame chart, we have the following picture. The chart here is not as interesting and thrilling as the high time frame charts, but we could try to get some nuances here if you will go through this action step by step. So what we have, first reaction on the Fed meeting. It's very fast upward action. Immediately, market has tried to cancel and erase this upward action with the strong pullback. But that attempt was not successful. You can see that market almost has reached these lows, but wasn't be able to totally erase this upward action. And that has become the background, the platform for further upward continuation. Recently, we have another thrusting action. Take a look that this was the thrusting action and that was the thrusting action. And the one point why market wasn't able to continue move higher is mostly due to the daily average bot. So if you can see, this market has reached this area and turned to some consolidation. What we see right now, we see that this bearish reaction on the second rally is a bit weaker than it was here. It means that the strength of the bears is becoming gradually weaker. So now market in fact has turned to some sideways consolidation that mostly reminds wide bullish flag. So reactions were very choppy. We not seeing a thrusting action here. It means that it's mostly has the features of retracement rather than downward continuation, rather than thrusting impulse action. So we do not see anything right here, like here. We see more gradual action. And that could be the sign that the chances on the upward continuation in the short-term perspective seems a bit preferable, more probable. At the same time, we can't count right now on the reaching of this target, because take a look at stance. It's one above the 152 and it stands above the daily average bot, because daily average bot stands at 150th area approximately. So in the beginning of the week, we mostly have to be focused only on this target. It's 150 right at the daily average bot. So the breakout here could happen to the upside. What will happen after that, it's very difficult to predict, because market has different scenarios. First of all, market could just continue move high according to this flag, continue to the next target. Okay? While it will stand inside of this range, it will keep chance on appearing of the butterflies we have discussed on the daily. So that could become some sort of the left wing. This could become the right wing. The market could show some another leg down to test finally the 1618 extension of this retracement, and only after that could turn to the upside. That's the second scenario. Currently, we do not see any signs that could clarify what scenario will prevail, but the fact that this action looks bullish and the market really could test at least the first targets around 150.18, 150.36, that is the daily overbought. That's our first step that we will be watching in the beginning of the next week. But in general, the situation that now we have on the Great British Pound keeps validity of deeper upward retracement in the long-term perspective. That is mostly based on the more dovish recent Fed comments. That Fed has brought more, as we could say, indecision, more concern on perspective of the rate hiking. It put them in the dependence on the data. And that's uncertainty. And that's why the recent comments looks a bit more dovish. That is confirmed by the dropping of the treasury bonds yield. So that's been said. Let's see. We'll keep watching what will happen on the Great British Pound. Situation is interesting, but it's a bit choppy. And I hope that we will get more deeper upward retracement that will let us to take some trades on the Great British Pound in the nearest perspective.